Why would somebody want to buy Eveready unless it's the price, the cheap brands that I keep on talking about? Before even you discuss Eveready, look at Uchumi. People are willing to sell, no single buyer in the building. Last week, you can remember even it almost hit 3 bob. Today, it's 2 bob approximately. If you bought at that 3 bob last week, Friday, say you at a loss. Now, let's go back to Eveready. Eveready, the same thing. Look at Eveready. People are willing to buy. If you look at the side of the buyers, there are many buyers, but nobody is willing to sell. I don't know what is driving this one, because even though you look at the fundamentals, even when you look at the chart analysis on the side, if you look at 1 month, see, it's going down. Even 3 months, it's going down. There's a time it was 1.67. Sai is trading at 1 bob, approximately 1 bob. And if you look at this chart analysis, they are resistant. It's around 1.25, 1.3. It's already broken the resistance. And when a counter breaks the resistance, it continue going down. So if you look at this chart analysis, it's talking volumes. It's screaming, don't buy. Even for 6 months, for 1 year, everything is going down. Currently, it's trading at 1 bob before it hits another resistance of around 0.90 or 0.89 there. So I don't understand why somebody would like, because there are no fundamentals. Whatever is driving this share, unless you are buying because it's cheap, and the other thing, unless you are buying for speculation purposes, and that is very risky. And if you are there and you don't know how to start investing in Nairobi Security Exchange, you don't know where to start, what shares to go for, there are 2 ebooks in my bio. One is a step-by-step guide. It will guide you how to start investing in Nairobi Security Exchange, what to look for in shares. Then the second one, especially for those people who come to my inbox, oh, Ajiko, I have like 1 million, what shares do I go for? The second ebook is about how to pick profitable shares in Nairobi Security Exchange. So both books, if you can be able to buy the 2 books, you'll be good to go in Nairobi, in investing in Nairobi Security Exchange. So back to Eveready. Now that was the technical analysis. Do the technical analysis, everything is heading southward. And if you remember, I usually tell you when the share is dropping, that's an opportune time for you to buy. But not Eveready. Eveready is heading southward and you avoid it, because it's not a fundamentally strong company. If it was a company like, let's say, even DTB, which is going down, that is the opportune time for you to buy when it's heading downwards. But Eveready, no. Unless you already have it in your portfolio and you want to average it down so that you can have a good exit price. But if you don't have it, why buy a struggling company? Back to the fundamental analysis. So if you look at the fundamental analysis of Eveready, this is a company which was listed back in 1967. And its main work, or its main job, they used to produce these batteries, the traditional batteries. And zile zilikuwa zinawekwa kwa radio, kwa torch. Those people who are born in 80s, 70s, 90s, they understand that business. So, but over the years, that traditional business has struggled, leading to declining revenues and no dividend payments. And because of this, many long-term investors, or what I call smart investors, they have exited the stock. And today the company is viewed as one of it's more of a speculative. If you buy there, you are buying there for speculation. There are no fundamentals driving it. It's not a stable company. It's not those companies that I call quality, fundamentally strong companies. And this brings the current market situation that you're seeing. People are willing to buy, but there is no single seller in sight. And by the way, these people who are buying, I'm thinking these are the people who are just buying for the price. And because it's a low liquidity, it's an illiquid stock. And if you look at what their profit, they have reported losses. In fact, I can't remember the last time I saw a profit from Eveready, neither a dividend payment. And the more reason why you should not invest in these shares. Though this year, 2026, they have announced an intention to go to renewable energy. Unajua siku hizi it's more of solar solution, renewable energy, and Kenya Power also not helping with blackouts and outages every now and then. So everybody is diverting to renewable energy and solar solution, and Eveready want to pivot into those sectors, which some investors, I know they are closely watching it. However, these plans are still in progress. And what I would advise you as an investor, this is not the time to buy Eveready share. Just wait to see the actual results once they implement these strategies that they have. You see whether they are going to report profits, their revenues, whether they are going to increase, whether they are going to declare dividends. And from there, maybe from there, you can be able to make a viable decision whether to buy or not. Because at the moment, there's nothing good about it. Thank you.